Let's look at this problem where we're asked to compute the return on net operating assets, the net operating profit margin, the net operating asset turnover. It's problem 4-17. We have the selected balance sheet and income statement for Target Corporation. And as you can see in this area here, we have the Target Corporation, the ticker sign, and then the revenues, net operating profit after taxes, operating assets for 2008 and 2007. And on this problem, we're asked to compute its 2008 return on net operating assets, and then I think this should say disaggregate. I think that's a typo, so let me get that in there. Disaggregate the return on net operating assets into net operating profit margin and net operating asset turnover, and confirm that return on net operating assets is equal to the net operating profit margin times the net operating asset turnover. Okay, now I've worked this one ahead of time, but I'll illustrate how I did that for you. Let's bring this to light. Turn this to a black font color. Okay, so part A says, let's calculate the return on net operating assets by taking net operating profit after taxes and divide it by average net operating assets. And in this cell, I've done that. I'll hit the F2. You can see the formula here, or you can look up on the formula bar. And you'll see that this time, instead of taking the beginning net operating assets plus the ending and divide it by 2, I've used Excel's average function, which accomplishes the same thing. So we take the value in cell E6, that's our 3,244,000 of 2008 net operating profit after tax, and we divide it by average net operating assets. And when we do that, we get 11.17%. Now I'll bring the next row to light, and we're going to calculate part B, the net operating profit margin, by taking NOPAT and divide it by revenue. So I need a space here to make that look right. And what we do there is we take the value in cell E6 and divide it by D6. Format is the percent sign, and we come up with 5.12% is the net operating profit margin. And then on C, we need to, or also on B, we then need to calculate net operating asset turnover. And we do that by taking D6, which is the revenues, and dividing it by the average net operating assets. Okay, and then finally we want to calculate RNOA and see if it's equal to NOPM times NOAT. So in English, that's determine the return on net operating assets and see if it's equal to the net operating profit margin times the net operating asset turnover. So to do that, we simply multiply the two previous calculations together, and if it equals what we get in point A, we know that we've confirmed it or proved that the formula works. And that's this problem, everyone. Thank you.